Well, as always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called Intuitive Machines, ticker LUNR. What these guys do, they started as a small NASA contractor flying lunar cargo missions. So basically delivering equipment to the moon under NASA's Commercial Lunar Payload Services program. And if we zoom out, you can see that the business got off the ground, and they have also been going for a few years in the listed market. So each mission is worth about 100 to 120 million, and that happens maybe once a year. So it's lumpy and low margin. That was their old business model. But now they're scaling their operations. They're trying to do something much bigger. So they're shifting into a recurring infrastructure business. So think of it this way. They're not just trying to fly to the moon. They want to build the roads, the telecom network, and the vehicles that go there, right? So in terms of how they make their money, is primarily three sources: the delivery, the CLPS landers, which is low margin and government funded; data transmission through a network of satellites and ground stations that will sell data relay minutes to NASA and commercial partners. So think of them in that respect as Verizon for the moon. And mobility and re-entry. So those are lunar rovers and vehicles that can move equipment around or bring samples back to Earth. So those three create the backbone of the company, and they're growing fast in all three areas. In 2024, and this is something that we can see here, the company did around 200 million in revenue. So we can see that at the moment, their balance sheet is not huge, although showing very healthy revenue growth. Profitability is not there yet, and this is why I think it's a volatile situation that we want to play with options, especially with the market cap just on the low 2 billion. And one of the critical things to watch will be the pathway to profitability, which, as we can see, is not quite there yet. But that's precisely the reasons why I'm looking at the stock. I see some catalysts that could be interpreted by the market as a signal for the company to get there. So, as I mentioned before, they made about $200 million in revenue, but most of it came from engineering and flight milestones. Throughout that period, they also built a backlog of about 257 million by mid 2025. So that compares to a 20% increase year on year. And roughly 35% of that converts into revenue this year, and another 40 to 45% next year in 2026. So you can see that in terms of the expectations, the EPS is improving significantly year on year, is expected to do for sure. And sales is also expected to continue growing nicely. Okay. Now, for a young space company, even though that may not seem the biggest on paper, it's unusually fast. When you compare about other players in this sector like SpaceX and Rocket Lab, it took them 7 to 10 years to get there. And if we compare this particular stock to Rocket Lab, we can see that yes, Rocket Lab has year to date outperformed the company for quite a while. But it's also true that it's about 7 years older than LUNR. So it has arguably had a much longer runway for it to develop the critical mass and economies of scale. So obviously with this one here, with Rocket Lab, uh, it's a different stock. They're reaching a different maturity phase. But I think the sector still has capacity to accommodate a narrative like this, where intuitive machines is going to have its own growth play. So why do I think that? Why do the next few months matter for this stock? Well, this is where the name becomes a trade idea as part of the story. Right now, they have three binary events that will decide how investors perceive the company. And you can see that back in 2024, there was very high expectations for the stock, which reached just under $25. So with the next three things that are coming, we could see a similar move to the upside. So we could see the stock trying to regain that territory. The first one is the contract with NASA to build, fly, and operate the moon's first crewed rover. They're already a finalist in this process, and if they win, it could add another $200 million in their backlog. Again, that's roughly about 80% to their current book of business. It's pretty significant. But also, it could signal to the market as well that NASA trusts them with recurring operational work. So obviously becomes a much more recognized player. And that, of course, would be translated with multiple expansion. That alone could re-rate the stock significantly, which at the moment, it's something that has been getting some momentum here. But of course, we could see price targets going up as well. The other event is the Near Space Network Services. There's an award coming between October and December where NASA hands out new task orders for lunar data relay. Each one is about 10 to 30 million, but the bigger story is that it confirms this new space data telecom revenue stream. At the moment, it's something that is fairly experimental. But being a recurring revenue stream, that is something that I think the market will see with very good eyes. It changes how analysts model the company and, of course, how they model their expectations for growth. So that changes the perception from project-based player, which, as we've seen here before, can be very volatile, to an infrastructure play, which is a more steady and growth compelling story. So that, of course, would command double earnings. And again, it would be another factor to see multiple expansion too. The last one is an acquisition close for Deep Space Network. So they are at the moment acquiring a company called Kinetex. It's a navigation software company that already handles NASA's interplanetary missions. When the deal closes, intuitive machines will instantly add deep space flight dynamics IP and moves one step closer to controlling the end-to-end lunar data pipeline. On top of that, they're bidding to commercialize a NASA Deep Space Ground Station in Madrid, which could open non-NASA data contracts for the first time. So together, those three catalysts could add between 50 and 100% more backlog and validate the transition to a recurring infrastructure revenue stream. So the reason why I like this name is because all these catalysts, there's a string of them, they're going to play out over the next few months, and they correspond to different parts of the business. But they will all be accretive. And with the current geopolitical climate, I can see the authorities providing priority to sectors like this, where they're trying to grow their influence over space exploration and territory. We've seen how that was very much the case in the past, and I can see how these catalysts will also play in the sentiment of market. Hope you enjoyed the video. See you soon.